Bloomberg Radio.
If you're looking for the latest developments on the global bank turmoil, make sure to stay tuned to our news updates twice an hour all weekend long on Bloomberg Radio. And be sure to tune in into a special early edition of Bloomberg Daybreak Asia starting at 5 p.m. Wall Street time on Sunday, only on Bloomberg.
All right, everybody, as you know, it was a rough day for a lot of names out there in the equity universe. Not so rough? FedEx, number one gainer in the S&P 500. We're breaking it down for you. That's coming up.
Now, your 3-day weather forecast on Bloomberg 1130.
Partly to mostly cloudy skies for the rest of today. Kind of breezy and mild out there. Tonight, breezy and mild as well. Near 35 to 40 with a few rain showers around. For Saturday, partly sunny skies, breezy 50 to 55, followed by clear skies and 30 at night. And it's mostly sunny with brisk winds on Sunday, chilly too, in the low 40s. We're back up to near 50 though by Monday with partly sunny skies. This is Gary Best with your 3-day weather forecast on Bloomberg 1130.
Breaking news first.
While turmoil swirls in the banking industry, big banks have agreed to deliver $30 billion to shore up First Republic Bank.
Americans can feel confident their deposits will be there when they need them.
Fed regulators knew months ago about SVB. This is a Bloomberg exclusive.
Bloomberg reporting to Credit Suisse over the weekend has to have a special meeting.
If something ugly happened at Credit Suisse, we could see contagion across the world.
The latest on the banking industry turmoil. Stay with Bloomberg 1130.
Geopolitical risk, changing regulation, economic uncertainty. EY can help you identify the risks that matter. When it comes to the complexities you're facing, it isn't just about the numbers. To keep ahead of changing business needs and evolving regulations, CFOs, boards, and audit committees need critical insights to make better decisions. For more insights that matter, visit ey.com/beyond the numbers.
Businesses don't run on automation or algorithms alone. What powers businesses are your people and the people they serve. At Cintas, your dedicated service reps understand what you need to help you keep your employees feeling safe, comfortable, and performing their best. So your business can too. For workwear, essential cleaning products, first aid and safety supplies, and fire protection services, visit Cintas.com.
Oh, I'm ready!
And get ready for the workday.
Whether you're an in-house counsel or in private practice, Bloomberg Law gives you the edge with the latest in AI-powered legal analytics, business insights, and workflow tools. With guidance from our experts, you'll grasp the latest trends in the legal industry, helping you achieve better results for the practice of law, the business of law, the future of law. The difference is Bloomberg Law. Learn more at BloombergLaw.com.
The New Deal created American infrastructure that unleashed new opportunity. Today, we're doing it again with massive investment in modernizing our infrastructure to build for tomorrow. At Build America Mutual, we protect your municipal bond investments that help make it happen, building a vibrant future for our communities and your portfolio. Invest in the future of America with BAM insured bonds.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:20 on Wall Street. We check the markets all day long for you here at Bloomberg, and a rough end to a tough and crazy week on Wall Street. Stocks closing lower on continued bank worries. Even in spite of that $30 billion cash injection that First Republic is getting, shares of First Republic, they plunged 33% today. There's also talk that Bank of America might buy Signature Bank. At least that's what activist investor Bill Ackman is tweeting. He says he's hearing that will happen Monday. Bloomberg does not have that confirmed, I should mention. And of course, we're all watching Credit Suisse. It was under pressure again. The ADRs were in U.S. trading today. It fell in Europe as well. At least 4 major banks, including SocGen and Deutsche Bank, have apparently placed restrictions on their trades involving Credit Suisse or securities because of counterparty concerns. according to Reuters. Now, SocGen kept existing counterparty positions with Credit Suisse, but isn't increasing them, according to what some people say. So that's something we will be tracking for you all weekend long. And with that special edition of Bloomberg Daybreak Asia coming at 5 p.m. Wall Street time on Sunday night. For now, let's check the markets. The Dow down 385 points, let's call it. That's about 1.2%. The S&P 500 down 44 points, 1.1%. The NASDAQ down 87 points, 0.7%. The yield on the 10-year, 3.42% right now. We were a little lower earlier, but still not exactly, an endorsement of Fed hiking rates a lot more soon. NYMEX crude right now down about 3% on the day. Spot gold up just about as much, up almost 3%, and FedEx shares gaining almost 8% on the day after it cut costs and boosted its forecast. And that is the Bloomberg Business Flash.
All right, Denise, thank you so much. Denise Pellegrini. Bloomberg Business Week, you are watching and listening. Carol Master along with Jeff Matten, brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Excuse me, your small to medium-sized business could be missing out on an opportunity to claim the Employee Retention Credit. Innovation Refunds has helped thousands of small and medium-sized businesses claim over $3 billion in ERC refunds and may be able to help yours as well. To learn more, just head to getrefunds.com. Well, I got to say, another great economic indicator I always feel is anything and everything to do with transportation and the moving of things around in our global economy. So with that in mind, FedEx has certainly been on our radar today. The stock jumping the most in, I think, about 9 months, a two-day rally of roughly 15%. It got an upgrade yesterday ahead of earnings, and then on that quarterly update, the company boosting its profit outlook and more. So let's get to it. We've got a roundtable. Bloomberg Markets correspondent Kriti Gupta joining us via Zoom in New York City, and this has been on her radar. She's been like, hey guys, don't forget FedEx for the last 24 or so hours. And then also with us is Anthony DeRuyter. He's senior analyst covering the company over at Third Bridge. He's on the phone in New York City as well. Kriti, let's kick it off with you. You did give us a heads up, I feel like 24, 30 hours ago or so ahead of FedEx. Big rally in the name. Tell us about the quarter and why the stock shot up so much.
Yeah, Carol, to your point, I've been really annoying about it because this is a really big deal. I think a lot of the spotlight has been on, obviously, the banking crisis. But look, at the core of the issue is this idea of inflation. I think FedEx is such a great story to kind of talk about it. We think of FedEx as the bellwether stock. If shipping activity in the United States and around the world slows, that must mean the economy is slowing too. Well, this time around, look, we know that consumers have been spending just a little bit less. The economy is slowing, perhaps not to the extent of panic, but slowing nonetheless. And that really showed up in FedEx's quarter here. The estimates going into those numbers after the bell yesterday was that they were going to see a pretty substantial volume decline and therefore a profit decline. And that's exactly what they saw. A volume decline of about 6% across the board, and then a revenue mix. And ordinarily, when you see those kind of stats, you would think, well, the stock should drop, right? The investors should kind of punish the company for missing their earnings. But it was their cost-cutting measures that rescued the stock. The idea that they are going to be cutting headcount by 25,000 people by May. And that's on top of the 10% headcount that they were already going to cut that they had announced in February. Now, it's really important to put that into context because FedEx has about 191,000 employees.
That's a lot of workers.
That's a lot of workers. Yeah, that plus no buyback, so equals cost cutting.
Right. Anthony, I want to bring you into the conversation because, as we know, FedEx has been cutting costs already, and we did get news in December about that additional $1 billion in costs. And so there are smart and productive cost cuts, right? And then there are cuts that aren't necessarily going to mean anything. Help us out here make sense of it.
For sure. Thanks for having me, guys. So, everyone's focused on those cost cuts over in labor. I think, the people we speak to say, look, this is a short-term P&L boost, and it makes sense, right? You cut costs over in labor, and that helps out the P&L. But one thing that they point out is, what does this do to the company long-term when it comes to attrition and productive labor going out the door following that labor that's just been cut, right? I mean, FedEx is a place where they bleed purple, and there's this big culture of people come first, especially under Mr. Smith before Raj. So now you're doing the opposite, and people are from what I've heard, from what we've heard, is there's now this fear that eats into the productivity outlook, which could hit FedEx moving forward. And then, outside of labor, we've got to think about, look, they're talking about $1 billion in permanent cost cuts this year and then $4 billion under drive next fiscal period. Where are those costs going to come from? Because based on what we're hearing, a lot of that implementation is going to be really difficult, because where do you find those costs that you can actually take out without sacrificing something else?
Kriti, I'm curious about when it comes to air fleet. What's happening with that?
Do we lose Kriti? All right, we're going to go back to Anthony. Hey, Anthony, though, Kriti was kind of actually even nudging us about, a smart thing to look at is the air fleet. So what are we seeing, Anthony, when it comes to FedEx's air fleet?
Absolutely. So that's actually the big one. Our network says that if you're going to look for where to get your biggest cost cut, your biggest bang for buck with FedEx, it's going to come from your air fleet. I mean, you permanently cut a plane out of the fleet, you're saving yourself up to tens of millions in annual recurring OPEX, right? And, I think that makes sense given what we saw from FedEx yesterday in their call. They talked about how this year they're going to try and phase out, or at least begin the process of phasing out their MD-11s and taking this delivery of these more efficient, better unit economics 767s and 777s. Now, can you actually do that? And, what we're hearing is that's really hard, because you have things like minimum flying hours for the pilots. They're not going to be happy if you're basically taking out capacity and trying to take away their minimum flying hours. And secondly, you put at threat the air slots, the landing rights, right? And that's a long-term potential loss. And I guess one place you're going to see FedEx ideally not do that is Trans-Pacific. That route is way too important for them. So where else can they do it?
Well, Anthony, I got to jump in here and ask about the strategy that FedEx has used. We know that they had this massive warning that I think tanked the whole market last fall in September, I believe. But at the same time, when they're competing with the likes of UPS or DHL, for example, FedEx didn't hike their prices when UPS and DHL did. They really invested in the headcount. Do you think that's coming back to haunt them a little bit here?
Well, I guess so, because you're starting to see that obviously FedEx is reversing that capacity increase on the labor side, right? Which obviously when you go wishy-washy with how you're treating your labor and your headcount, that doesn't send a great signal to the market. It sort of implies some sort of strategic misdirection. And also, I mean, you're seeing now that with this 2023 GRI of 6.9%, which was matched by UPS, by the way, now they're trying to hold on to yield as volumes come down. How successful will they be with that? Because we know, for example, that FedEx is not as strong as UPS in the SMB segment. That's part of, UPS's sort of, first off, I guess, better, not bigger, and now better and bolder strategies to focus on that higher returning customer segment. If FedEx isn't there, it means that they don't have the same quality of revenue. And if they're not getting that same, I guess, quality of revenue and what that means for margins, it means they have to take, I guess, capacity out of the system. And as we pointed out just now, that's really difficult to do.
Kriti, I wanted to go back to you because, as you know, in September, FedEx did issue that profit warning due to declining packaging volumes around the world. What changed since then?
Absolutely nothing, actually. Look, they are still getting package volumes across the board, are seeing declines in their express unit and their ground unit, even their freight unit. They've made that very, very clear. I think the issue here more is, why is FedEx no longer being seen as this kind of global bellwether? And I think the answer to that is, look, it didn't necessarily tank the market or have any effect on the market. I don't think that's just because the spotlight today was on kind of the banking crisis. I think it was because FedEx is dealing with a lot of the same issues that a lot of other companies are dealing with. It's the inflationary cost at the end of the day, and that's kind of skewing the results when it comes to just how much profit and activity FedEx is seeing.
Yeah, and maybe perhaps telling, despite FedEx's rally, UPS down about 0.6%. So, Anthony, just saving last words for you, got about 30 seconds. What are these companies telling us about the outlook?
Yeah, look, the role for FedEx as a bellwether, I almost take it the other way. I mean, we're hearing that you got to look at ocean freight and what's happening there to figure out what's going on with FedEx and their volume outlook, which, by the way, we're thinking mid to high single digits drop. I think you've got to people have to be dialing into this April 5th call on Drive just to see how long, I guess, how much legs this run has with regards to cost cutting. Volume outlook, what it is, it's going to have to come from costs. And as I pointed out, there's a big question mark there. Can they take more out of costs, especially against this declining volume outlook?
Yeah, running a business just on cutting costs. I mean, I'm just thinking, get an MBA, like that's not how you do it. But interesting, and we shall see. All right, going to leave it there. Anthony DeRuyter, senior analyst over at Third Bridge, and our own Cree Gupta, markets correspondent at Bloomberg, with that great heads up on FedEx. All right, right now, back to World and National News, off to our 1130 newsroom, and Leslie Lotto. Hi, Leslie.
Hi there. There are reports that former President Trump could soon be fingerprinted and photographed for a mugshot. However, Trump is undeterred, attacking prosecutors pursuing various cases against him.
Whether it's the Mar-a-Lago raid or the Unselect Committee hoax, the perfect Georgia phone call, it was absolutely perfect, or the Stormy Horseface Daniels extortion plot, they're all sick.
The AP reports security preparations are underway in New York City for a possible indictment. The Democratic Manhattan DA appears ready to elevate the false paperwork case from a misdemeanor to a felony.